Hey traders, Raghee here. Happy Wednesday, everybody. Welcome to Charts and Coffee for August 4th. Good morning, good morning. Good to see everyone. All right, so let's get into it. We've got non-farm payroll this Friday. So today is the day we get ADP numbers, and it sort of begins a psychological countdown to non-farm payroll. Now, what seems to have, clearly taken sort of the charge of the psychology of the week is the way in which we're watching the response to the current Delta variant. Again, it's really important when we start getting into politics and pandemics and all that, that we keep it very much factual and based in the way in which the market is responding to the news, not about opinions, but we observe what was the catalyst for volatility. And then what was the reaction? Not just the initial reaction, but how did the market also, for example, yesterday, I talked about this in the free video. We saw the 9:50 a.m. sell-off in the broader averages, in the indices. And it took, I don't know, less than 30 minutes for the market to sort of sort out that we weren't going to keep plummeting to lower lows. And we saw what happened the latter half of the day. Those are the responses. What was the catalyst? What was the initial response? And what was a subsequent response? That tells me a lot about the way in which the market is going to digest those kinds of bits of news going forward. And the more that we can get a glimpse at these types of responses, the initial response and the subsequent response, the better idea we're going to have of whether or not there's really a chance for, is August really going to be that scary? Are we going to see a dramatic sell-off? Is this going to be more in line with a 10-year look back on the seasonality, or more the choppy 5-year look at the seasonality? Remember, there's not just one seasonal. And be very cautious just sort of subscribing to this idea that, this is what always happens. Remember, seasonals are not setups, they're tendencies, and tendencies are not trades. So keep that in mind. And that's sort of what I'm looking at, more responses like this going forward. All right, so let's get into it. Sean says gold finally got some legs. It's not there yet, right? I mean, we're just chopping about in an area that we have been in. But Sean, you're right. We're finally seeing another surge, much like the surge we saw on the 29th. We're seeing another surge here on the 4th as gold goes up and attempts to break that 1835 level on GC. Now, this is something I talk about in the futures room and in the mastery. And that is, if you're looking at an ETF that has a related futures contract, the way silver does, the indices, crude oil, gold, bonds, look at the underlying futures contract. And then, of course, you can make your trade in the ETF, or in the case of what we've done in the masteries, we're long GLD options. We've already scaled out once at 1835. 1835 is the initial target. 1835 is that near-term ceiling. Not anything beyond that, because then you're actually being unrealistic. And any of us would be being unrealistic about targets. But yeah, you're absolutely right. Now, does it tend to move counter to crude or crypto? I don't pay any attention to that in terms of a steady correlation. And the reason for that is, and I'll just double check, right? I always like to double check my work. But let's see, and by the way, way too much is made of this whole crypto has replaced the gold as the inflation hedge. I love crypto. I've been in crypto since 2016, but I've also had it up to here with crypto too. Crypto is its own language and it's its own market, and I think it's wonderful, but I try not to let it mix up too much with these more traditional markets. But the crude oil question is an interesting one. So is there some sort of inverse relationship between gold and crude? And yeah, no, not at all. It's a slightly negative correlation, but really not one that we would look at. I haven't looked at that relationship mainly because there's usually no real reason to do it unless you're looking at the inflation or reflation or macro that crude oil might be signaling as opposed to what gold is. That's an interesting one, but no, generally speaking, there's not a historical, if anything, they tend to maybe move slightly together. But no, I think right now when I'm looking at the intermarket correlation of the last 30 days, not really, but very cool question. I like crude's chances for potential movement higher. What I would do with crude is keep a bullish bias and then look for maybe a 50 to 618 retracement of the last major move and perhaps some volume ledges that could accompany that. And then I would look to position myself long in crude. So cool question. Thanks, Sean. I appreciate it. Next up is thoughts on long TMUS on the bearish momentum. Okay, let's take a peek. So TMUS, we're consolidating here on TMUS, Alex. So I wouldn't call it bearish momentum now. Take a look at the action we saw on the 19th of July. Take a look at the action we saw on the 19th of July. So that particular candle, which was the first blue grab candle that we had seen since back on the 19th of May, that was the pullback. That was definitely bearish momentum within the context of an uptrend. So now what we have really is a compression. What we really have now is sideways action waiting for some sort of momentum explosion. My expectation would be momentum explosion to the upside because that would be a continuation. So anytime we have a trend that pulls back, I'll look for the pullback to resume in the direction of the trend. Anytime we have a pullback that then transitions into consolidation, I'll still look for that as a consolidation to trend resumption. In other words, I'll still look at that as a continuation. So I'll look at it in the same way that I would look at it at a pullback within the context of the trend. It's likely to set up the continuation. So I hope that makes sense. So thanks for the question, Alex. All right, next up is based on a poor jobs report. So we had initial claims. We have initial claims coming out tomorrow. Now, when we talk about poor jobs report, I guess you're thinking ahead to tomorrow, Dan. Look, I think regardless of the jobs number, I'm bullish ZB. This is not a new opinion or analysis. You know, we officially went bullish ZB way back in April with the momentum. We saw this little momentum explosion. Too much coffee this morning, Rob. We see this momentum explosion on April 15, and then that is the completion of the wave reversal. 1, 2, 3, Dow reversal as well. So moving forward from there, even though we chopped for a good bit, and we continue to chop. You know, if I look at the JT Multi for an assessment of the chop, we continue to chop until the first week of July. But we started to put in more consistent grab candles by mid-June. But nonetheless, everything changed on that mid-April 15 breakout. Okay, so now that we have the momentum behind us, where there's momentum, where there's a trend shift, you know, at some point we get a trend. So we already have a trend. If we're going to have some kind of volatility that gives us maybe a correction or even a break to the upside, yes, we can look at singular data points for that kind of insight. But again, when you say based on a poor jobs report in July, we'll get that July number Friday. We'll get the weekly initial claims number tomorrow. So, you know, if we get a disappointing jobs number, What would that do to bonds? I'm still looking for an overall move to the upside. So I'll look at NFP or even initial claims tomorrow as a catalyst to one of two things. Either we get the correction and we will buy again for the fourth time in less than 2 months. So we've continued to buy the dips since mid-June. And if we get a break to the upside, terrific. That's follow through for a current open long TLT position that we have. And so I guess the bottom line is, I would definitely look for a catalyst for opportunity, but my direction, my strategy is already in place. The jobs report is not going to change that, but rather it could help give me another, again, follow through or entry signal. But don't argue with those double greens. The double green is telling you what you need to do, and what it's saying is, look, if you're a bull, great. This is the environment for buying. And if you like pullbacks, like moi, this is the environment for those pullbacks. So thank you for the question about bonds. Bonds have been the gift that keep on giving for us in the mastery. We just continue to, just roll with that overall uptrend. So thanks for the question. Next up is thoughts on SGFY. I really don't. This is the first time I'm looking at this chart, to be quite frank. I really don't. I don't have a trend here. I don't see a particularly interesting formation yet. What I can say, because this is chop and has been since the end of April, last week of April, what I would say is let's focus on a zone of support, which would be oversold, support, and then that would be a buy zone. So what I really want to see is this market just head a little bit lower to where clearly from previous bounces, this is an area that the market could want to bounce from. So interesting for a choppy market oversold play, which is really not that dissimilar, by the way, to the Russell conversation that we've had both here in Charts and Coffee and in the chat rooms. Same idea, choppy market. The trend that preceded was up, so I'm going to be far more interested in buying. Now, I wouldn't call this a dip. These are oversold moves. So I'm still looking, where we are right now. This is just coin toss area in the middle of the range. That's the 50% of the range. You also notice there's a point of control there. The middle of the range doesn't give anybody an edge. One day you're really happy, one day you're really sad, one day you're really, right? How many of you have been stuck in the middle of a range, right? It's just a coin flip. Momentum one day to the upside, momentum one day to the downside. There's no real edge to be had until we either get back up here again or we get down here again, right? So, but that's kind of the same idea behind SGFI, where you'd be really cautious playing sort of the slop in the middle of a choppy range. Get to the edge. The edge is where your edge is. That's where your advantage is. All right. Next up is, are we interested in crude oil today? Maybe. We have our Battlehawk. We have our weekly live trading session in the Sector Secrets Mastery. By the way, if you haven't checked out the replay of the webinar that we did Monday night, you can check it out over at simplertrading.com/scale-replay. Now, if you had already registered for the webinar, I believe you got the replay yesterday. So check it out, but we'll be having the live trading today we'll be starting up in about 5 minutes. So the way in which I would look at crude is really going to be more of a retracement situation, and we can definitely take a look at it in the room, but I'm not going to prioritize it, Battlehawk. We have so many other things that are on the radar, and I'll talk with you guys about that. If you're in the futures or the options room yesterday, I gave you guys the notes for the day, and you saw just how much we have on the radar. When I see you all in the Sector Secrets, we'll dial in that list, and we'll continue to get some more setups out there. So, I'm probably, from the energy standpoint, I'm probably more interested in waiting for that pullback in natural gas. That's really what I want. That's the best looking trend in energy. And that's where I would love to get yet another long position on a dip of the trend. Okay. Is Walmart a buy? Hey there, Chelsea. So Walmart is, I don't want to say no, short it, right? I would not recommend that. But of all the different types of clarity we have in this market, a choppy market, this has been chop, right? This is a market that's been in chop since late March. So while, yes, we could look at Walmart, it's climbing very slowly and steadily. The July VWAP, it's climbing very slowly and steadily. The wave, it is north of the 200 exponential moving average. So I don't want to short it. But of all the things that I could buy, I don't know that this would be at the top of the list for me. Because, look at the structure, look at the lower row of the JT multi telling me that this is really more a sideways market that's clearly taken on a little bit more bullishness. The grab candles are a really good way to sort of front run what could be a transition to a double green here on the daily time frame of Walmart. So I clearly won't buy it today, with it moving higher. I'm not going to buy higher highs. That is one of the definitely one of the principles of the sector room that we do not break. We don't buy into higher highs. We don't short into lower lows. We always use momentum, which is really the secret of options trading, harnessing and using momentum. So this would not be advantageous for us, but I definitely keep an eye on it. Like I said, I really would not want to short it. And the grab candles and the wave and the VWAP probably give us sort of an aggro long front run into what could be a double green to come. So pretty interesting looking chart where the grab candles are sort of saying, hey, pay attention to me. I'm going to be heading higher. I just don't have the structure yet to justify the double green 8, 13, 21, 34 read, the fully stacked EMAs that our JT multi would measure. Okay, so next up is, what are my thoughts on copper? We had the 1, 2, 3, and a lot of times, those of you that have heard me talk about a 1, 2, 3 of any kind, this would be a continuation 1, 2, 3. Our breakout was here. I like when the market retraces the 3-point to whatever the subsequent swing high would be, because again, I don't like the momentum trade. Momentum would be getting long here. So now, if I look at the number 3-point to the swing high, and what I'm talking about is this move here, right? Now it's actually looking like, much like crude, somewhere in here, yeah, we could probably start looking at long calls in copper, long copper if you're a futures trader, and maybe, although it might be a little too soon, we can start looking at Freeport McMoran, which is a proxy to copper. Okay, thanks for the question. JMO says, oh, what's my t-shirt say? I reject your reality and substitute my own. Oh yeah, I forgot the t-shirt I have on today. I guess you guys can see it up. Oh, right. Okay, let's see. Next up is joining Sector Secrets today after much thought. Looking forward to it. Easter, a great time to be a member. This week is going to be epic because, I'm going to be talking a lot about the principles that have kept us on the right side of the market more often than not this year, which I think a lot of people would agree it's not been 2020, but yet there are glimpses of 2020 in this year. So I'll be talking about the different principles that guide what we do in sector. So yeah, terrific week to be joining us. So welcome. Look forward to seeing you here in just a little bit. All right. So, and speaking of that, that's it. That's time. So I will see you all in the Sector Secrets Mastery shortly for our weekly live trading, 9:20 to 11 a.m. this morning. And then we'll have our charts and coffee as we do each and every morning. We've been doing charts and coffee now since October. It started off as a little way to sort of get me ready for the morning, and it's kind of turned into a very, very cool thing that we do every morning here at the Simpler Trading YouTube channel. So Thanks for being a part of it. We're coming up on our 1-year Charts and Coffee anniversary in October. Thank you for being a part of what turned out to be just a little experiment and has really grew into a morning crew of its own. I appreciate you absolutely being the best part of it. Be good to each other. I'll see you tomorrow.